Welcome back everyone. Today's video is part of our 25 tax planning series, and we are diving into one of the most valuable opportunities for landlords this year. Getting your rental property filing ready under the new beautiful tax bill. If you own a rental, it's like planning for your plan. You have any green thumb people here, this video is for you. By the end, you will know exactly what changed for 2025, what records your tax pro will need, and how to qualify for QBI deduction, and how to make sure your depreciation and safe harbor lock are audit ready. Because remember, your plan will die if you don't plan for it, if you don't take care of it. The same for your rental and your tax. If you don't plan for it, you don't care for it, you're not gonna get the benefit out of it, right? So let's break this video into 8 key parts, and I will guide you through each one step by step. So we always want to start with remind you of what changes in rental filing, right? Especially for 2025 with the big beautiful tax bill. A lot of things have changes. I'm just going to cover some basic foundation. So after July 2025, the bill was in effect, so permanently reshaped several core landlord deduction. So I want you to think of this section as your update briefing for your 2025 tax year. So some key highlights. First, 100% bonus depreciation is back. So under section 168K, landlord now can fully expensing qualified property. Remember, the key date that you have to place in service is after January 19, 2025. So that means if you install like new flooring or appliances, HVAC, or even a roof, you can deduct the entire cost this year instead of spreading it over time. And then second, section 179 expensing got a major bump. The deduction limit is now 2.5 mil with a phase out starting at 4 mil. So this applies to assets used as an active trade or a business. So if your rental qualify under section 199A as a business, you can use it to write off major purchases like vehicle or heavy equipment used for your rental operation. Third, the QBI deduction is now permanent. This is huge. So the 20% passed through deduction for qualified business income is no longer set to expire after 2026. So for landlords who meet the safe harbor rule, this means an ongoing automatic tax saving every single year. Also next, DIS clarified the safe harbor grouping rule. So you can treat each rental as its own business or group multiple rentals together, but only if they share common ownership and management. So this change can help you like simplify reporting a lot, right? Especially for a landlord with multiple units, it helps you meet your hour requirement for your lock. And finally, an important deadline note: energy efficient credit expire after 25. The energy efficient home improvement credit and residential clean energy credit are still valid for a property placed in service in 25, but they end after December 31st. So if you're considering solar energy efficient window or HVAC upgrade, do it this year. So this kind of wrap up the first section that I wanted to share with you, because we are in the tax filing season. So in part 2, for your Schedule E, I want to go over what a tax pro or tax firm would want to collect from you. So this is about being ready, right? Because you don't want to wait until the last minute and scrambling, trying to file a CPA, scrambling, trying to get your record together. So this is what you want to do. You want to gather this in January and mid-February, so the sooner the better, right? First, you want to total your rental income per property, include any 1099 case form that you receive from like Zillow or some kind of payment app. Second, you want to put all your operating expense. You want to put everything like repair, maintenance, cleaning, supply, to utility and like property management fees. Third, remember property taxes and insurance premium. So these often get missed but are fully deductible. And then 4, mortgage interest that your Form 1098 from each lender. 5th, capital improvement like new assets purchases include like invoices, the date each item was placed in service. 6 mileage and travel logs. So every trip related to your rental will count. 7, your safe harbor service logs. We'll go over how to repair these in the next section. And finally, prior year depreciation schedules. Your tax pro or CPA need these to update your basis and calculate 25 depreciation. You want to pause for a second and think, right? What if the IRS asked you for the proof for every line on your Schedule E? How could you provide it, right? So that's exactly why we are going to spend the next section focusing on the QBI safe harbor rules. So let's move on to part 3. So you kind of know what to gather for your proof, right? So let's talk about how to qualify for the 20% QBI deduction. So this section is for anyone who wants to treat their rental like a business and get rewarded for it. So under Revenue Procedure 2019-38, you must meet 4 requirements. So number 1, you want to perform 250 hours for rental services per year. So the hour can be by you or your employee or your contractor, as long as the work directly supported the rental, like cleaning, repair, showing tenant management, or like me, slapping the fly. And number 2, keep contemporaneous records that mean a detailed time block showing the date, the hour, the description of each activity. And then number 3, you want to maintain separate books and records for each rental for your grouped enterprise. So that could mean 1 spreadsheet per property or 1 master ledger with clearly separate each unit, right? And then number 4, you want to attach a signed statement to your tax return confirming you meet all safe harbor conditions. So if you use a property manager, like Good News, that our account as long as you have documentation of the work performed. So by meeting the 4 tests, your rental qualify as a trade or business, unlocking that 20% deduction. Next, let's move to a section that can dramatically boost your deduction, depreciation, and cost segregation. So this section is where landlord can win big on paper and still stay compliant. So let's take a step back with depreciation. So depreciation is just saying for you want to spread the cost of buying your property or improvement over time. So under 25 tax rule, many items can now be written up immediately, so you don't have to spread it out. So residential rental properties still use a 27.5 year, and then commercial is still 39 year with regular depreciation. But if you make significant improvement in 25, you might qualify for a bonus depreciation, or you're gonna need to do a cost segregation study, right? So what is a cost segregation study? It's a study that breaks down your property into components like cabinets, flooring, lighting, and landscape. So it separates out the building structure and the other items that have like the 5, 7, or even 15 years of depreciating life. So those, the 5 years, 7 years, or 15 years, it can you can fully expense this year now. So you can do the 100% bonus depreciation. So these short life assets can be deducted immediately, right? So just imagine that you have like a 100K renovation. So that's 100K renovation. It can be write off, right? Because if it's qualified for the 5, 7, or 15 years property, then it can be write off now. So coming up next topic, let's talk about what we should fix before we file. Some common issues, common mistakes. So every year I see landlords lose deduction because of small mistakes. So let's go through the most common one together. First thing is repair versus improvement. So what's repair? Repair keep your property in good shape. Improvements add value. So those are the key differences. So you want to use the 2,500 de minimis safe harbor rule per item per invoice if you have a written policy to expense your small item. Second, mixed-use property. If you live in part of the home or rent it short-term, you want to allocate expenses carefully between personal and rental use. Third, QBI losses carry over. So if your rental show a loss in prior year, you want to keep those records. The QBI deduction can exceed net positive income, so carry over losses matter. 4, you want to state depreciation differences. Some states like California and Hawaii still disallow bonus depreciation. So that means your state taxable income could be higher than your federal return. So your tax pro or CPA will make the adjustment, so you don't need to provide the details. Now that we are clean up the problem areas, let's look into some rental checklists for you for your tax year 2025. So let's move on to part 6, your checklist. So it's kind of like your roadmap, right? So you can stay on track before the tax season begins. So you can use Notepad or Excel and keep track. You want a year-end profit and loss statement for each property. You want to have all the mortgage interest, so Form 1098, and all the property tax bill. And then you want to total the utility, repair, and maintenance. And you want a list of capital assets within with purchase date and service date. You want to include mileage and travel logs, and then QBI safe harbor service logs and your signed statement. And then also prior year depreciation schedule, and then property management contract and invoices. So these are the core items your CPA needs to finish your Schedule E. Confirm depreciation and proving or substantiate your QBI deduction. So once you have checked those boxes, you are ready to see how this play out in real life. So let's walk through an example. Let's move to part 7. So meet a couple who own 3 long-term rental and 1 Airbnb. So during 2025, they logged 285 total hours of rental services like cleaning, tenant screening, maintenance, and record keeping. So in November, they installed 20 grand worth of new appliances and took 100% bonus depreciation on that one. They also had a cost segregation study done in one of the property and accelerate another $60K in depreciation. So with these deductions, their taxable rental income dropped from $95K to $15K. And since they meet the QBI safe harbor test, they claim an extra 3 grand deduction. So under section 1999A. So that's the power of combining documentation with planning, right? So that's the reason why we have this video right now, to remind you that there's a thing that you can do to prep for your Schedule E. So let's wrap up, let's recap. So in part 1, we cover what changes, right? And then we talk about the big beautiful tax bill, the full bonus depreciation, section 179, permanent QBI. In part 2, what your CPA would need. Part 3, the rules on QBI safe harbor. Part 4, show you how cost segregation can help you supercharge your deduction, right? Part 5, we address some common issue for filing before. And part 6, we talk about your tax prep checklist. And then we show you an example. So what can you do next now, right? So between now and February 15, you want to make it your goal to first gather all your receipts, invoice, and service logs. 2, you want to verify your depreciation schedule are current. 3, you want to review your QBI documentation. 4, you want to contact your CPA early. You don't want to wait until March. So if you follow these steps, you will not only file on time, you will maximize on every legal deduction available to you as a landlord under the new 25 rules, right? So this is the year to take full advantage of the big beautiful tax bill and position your rental portfolio for long-term success. Just a heads up that in the next video, we'll move to high income planning and explore how AMT and SALT and credit phase out are changing for taxpayer earning $250K and over. So stay tuned, subscribe, so you can be notified when the new video come out. Share it with another landlord who could use for a smoother tax season, and you need templates to help you to log your hour or mileage. You can visit our shop at Deductions on Etsy. And for other information, you can also go to our website, assetguideinstitute.com. Thanks for watching, and I'll see you at the next update.